Welcome to Grokchain Conversations. This podcast is presented by a multidisciplinary group of legal, financial, and technology professionals to meet and discuss today's most pressing questions around the use and governance of the blockchain. Through roundtable dialogue, we will provide listeners with a full spectrum of views on where this technology is today and where it might be leading. The information provided on the Grokchain Conversations is for educational purposes only. The information provided does not constitute legal, investment, financial, tax, accounting, or any other professionally licensed advice. The views expressed here are those of the individuals, not those of their respective employers or Grokchain.
So, hello. Today we have Anja and Haroon, two lawyers, one from Europe, one from the United States, to discuss what's been going on in the legal spheres of cryptocurrency and blockchain. In Europe, they've more or less finalized the MiCA legislation, markets and crypto assets legislation. In the US, a number of bills have been proposed. And we look forward to Haroon telling us a bit what's going on with the US perspective and Anja with the European perspective. So Anja, would you like to introduce yourself?
Yeah, sure. I'll go first then. So my name is Anja Blaj. I'm located in Slovenia, in the capital city, Ljubljana, and I'm running the blockchain think tank Slovenia from here. I'm also an in-house lawyer at Doing Good, which is an incredible NFT platform created for donations and for the social impact protocol. And I recently joined the European Crypto Initiative for the purpose of educating and helping with the better regulations.
Cool. Educating the legislators.
Well, both probably. The regulators and the industry on the other side about how the applications of the regulations are going to impact everybody. Pretty much goes both ways.
All right. Haroon, would you like to introduce yourself?
Sure. Thank you, Alessandro. My name is Haroon Cheema. I am a U.S. lawyer based in New Jersey, near New York City. I've been a lawyer for 25 years. I am the principal of Timpani Global LLC, which is a consulting shop that advises a variety of startups and growth companies and also some large investment banks on a variety of legal, financial, compliance, and risk management issues. Some of the projects I've been working on do include cryptocurrency and blockchain. So I've been following, on behalf of the folks I've been working with, I've been following the regulations associated with crypto, NFTs, blockchain, DeFi in the United States to make sure that really everybody stays out of trouble, but can also achieve their business objectives.
Cool. Thank you. Nice to have you.
Thank you.
So who would like to start? Who would like to throw their hat in the ring and bring us up to date? Because this summer has been very, very active. And I, for one, have not been able to follow everything. So I'm looking for you guys to catch me up on what's been going on. Anja, you want to start? Because
happy to go first. Basically, I think we all suffer from a lot of regulatory activity and too little time to actually be on top of everything. So it's hard to really keep up with the pace or, be constantly informed about what is currently being proposed or where people should be actually effectively arguing differently, etc. So for those purposes, I'm really glad and happy that there's plenty of these advocacy groups, lobbies that have been created in different parts of the world. One in the US, now in the EU, we have European Crypto Initiative. There's plenty more around the globe, and I'm really happy to see that the industry, like the big players, including Ethereum Foundation, have now been recognizing the value that these organizations are bringing into the space and how much we actually really need them, so that somebody really speaks to the regulators, tells them what the feedback from the industry was looking like, and then is being able to maybe propose better text or, to basically even understand how this is going to then impact the whole society, or at least the industry that we are trying to innovate in. so much. So yes, like you said, MiCA regulation in Europe has been finalized a couple of weeks ago. And the work has now already started. So basically a lot of people are asking, when is this going to become effective? And, when is perhaps the date that we need to leave Europe or stuff like that? Those questions are still quite often brought up. And I'm not even sure if that's really a way to go. I mean, this is going to be having a very similar impact or effect, just like the GDPR, right? So as long as you're going to have the users in Europe, this is actually going to be applicable to your business. So no matter where you're going to be incorporated, this is something that you will have to comply with. That's one thing. The other thing is that we also quite often present to the projects that are now having more and more questions about what does that mean for them, is that they should be thinking about MiCA being effectively incorporated or effectively used already today, because there's going to be a lot of new conversations that we're going to be leading with the regulators in terms of defining better guidelines or defining the distinction, for example, between the regulated crypto assets and between financial instruments, between NFTs that are under the scope of MiCA, etc. So all these open questions need to be addressed and need to be discussed. And there's quite a lot of them. Like there's a lot of these technical standards that are being mentioned by MiCA text by default, and we're opening up these conversations. So there's a lot of work already ongoing. There's going to be a couple of workshops that we're going to be organizing for these purposes around different events in Europe. So yeah, it's been quite interesting.
Well, can you give us like a synthesis of what's in the MiCA legislation? Because it's for organizing markets, if I'm not mistaken.
Okay, yeah, that's a very broad scope.
Well, it's a little, how should I put it? The difference, the last time I looked at this stuff was the MiCA legislation essentially covered all crypto, all digital assets. Whereas the US has kind of carved out this little niche for utility tokens.
Right.
That would be theoretically, well, the idea would be that they would be covered by the Commodities Future Trading Commission.
To be passed, yeah.
But I'm sorry?
If the bill in the US is going to be passed.
Well, all the bills seem to have the same approach, that the CFTC is going to cover the utility tokens, anything that's not considered a security, basically.
There's a couple of things that we might want to mention with MiCA. First is why it was even created and why it came into this scope, or why it looks as it looks today. And the main thing is that regulators have simply been reacting towards Libra and what Facebook wanted to propose. So their main stablecoin product really raised a lot of doubts or raised a lot of concerns because it had the potential to possibly impact the monetary policy that Europe is currently controlling. And this is still quite prevailing through MiCA. So even though, for example, Libra, and even though Facebook is no longer pursuing that idea, there are still a lot of stable coins on the market, not a lot of them backed by euro. But the point that MiCA really addresses well is the issuance, the management of the stable coins, and what a person can do with it or a project, and where are the limitations. Those limitations are still quite open, and we look forward to get more answers to some of the open questions, such as what does that mean to have a payment with a stable coin provided in European Union? What does that mean that we only can have 200 million transactions per day? And what will happen if, for example, that number is surpassed? Is it really going to be that an issuer will no longer be having the ability to issue those stablecoins in Europe, and how this is going to be even prevented effectively? So all these open questions need to be answered. And this is only one of the scopes. So stablecoins are covered for sure. Then there is crypto assets, just like you said it now, there's plenty of utility tokens, there's plenty of ICOs that have been provided on the market, and MiCA actually provides you with really good guidelines around what a project will have to compose to be compliant. So basically, there's going to be national competent authorities that are going to be there to answer all the questions, whether you are a regulated crypto asset, and then what you should be doing if you are regulated according to MiCA. One thing that is worth mentioning here is that when it comes to the tokens that are being provided to the market, MiCA is almost like subsidiary. So it's very clear that there might be already existing regulations that are applicable to specific tokens. So it's not as if, if you now issue whichever digital token, MiCA is going to be by default the regulation that applies. It might as well be that this token resembles securities, that this token resembles financial instruments or certain other assets that have been regulated already, and that this regulation is primarily going to be applicable for those assets. In this case, MiCA very specifically says that, there's existing regulation. We should be thinking about that as well. So I would actually say that it's not as if there's a wild, wild west with crypto. It's more or less that we don't necessarily really understand well how the existing regulation applies to what we have created. Like quite often it's a monstrosity that we have created because one token can really have a lot of different functionalities being compounded in one single token. And quite often you would still see several opinions or, text provided by the regulators that are saying, yeah, you should be then making a distinction between two different tokens, just create many different tokens, and each is going to be regulated according to one specific regulation, and each is going to have specific functionalities. Whereas
that doesn't sound practical, but okay.
It doesn't at all sound practical, and I think it actually goes very much contra the whole spirit of Web3, which is let's combine all these features into one token, and let's have the management of this token, the issuance of the token, and the governance of smart contract provided in such a way that it's actually going to be effective for a long run. Not sure if, there's more than 80% of projects that have actually delivered and that have actually been complying with the promise that they have made in the past, that they're going to be combining all these features together and are going to be issuing something beautiful on the market. But nevertheless, some of those stablecoins or some of the tokens that have been really successful have been successful exactly for that reason as well, because they combine so many functionalities and are governed in a very particular and good way. Nevertheless, me joining European Crypto Initiative was more or less for the coverage of the NFTs. And the NFTs are also sort of covered by MiCA, but in a different manner. So NFTs are primarily excluded from MiCA regulation. The exclusion, however, is kind of soft. So the regulators were making a reservation that, for example, if the NFT ends up being fungible, or for example, if it's fractionalized, they specifically said in the recitals that this is then going to be a very strong indicator that the NFT is no longer fungible and that it's no longer unique, and therefore might be still regulated by MiCA. So those are, again, open questions that we will have to explore into details. And just one more thing, when it comes to that, I do believe that quite a lot of times, like you stated previously, Alessandro, when you really want to understand better how the regulation applies, like the existing ones, or how we might be creating this regulation, the first thing that comes to my mind always is to really look deeper into the technical standards. So quite often I learn a lot about how the token functions, or what is the purpose even of the token and what people can do with it by just reading the ERC standards. So literally going into the code, seeing what the code allows people to do with it, and then what are the core functionalities of these tokens as they are described on the GitHub, rather than actually on the paper that has been afterwards composed, or rather than just looking plainly into the regulation. I think those two documents should be always looked hand in hand.
Great, well, thank you. Haroon, please, can you update us on what's happening here in the US? Because if I remember correctly, there was the Lummis-Gillibrand bill that was passed, that was proposed, and there were, I think there were a couple other ones. I kind of I got involved with other stuff over the summer after the Gillibrand-Lummis bill came out, so I can't remember their names, but there's some other stuff. And then I think the White House came out with something.
Yeah, there have been a number of proposals out there given the political climate in the United States, and with the elections less than a month away, the midterm elections in the United States less than a month away, it's unclear if any of these proposals will, the formal bills will move forward in a meaningful way before the election, and then depending on the outcome of the election, still unclear if the bills will move forward. Particularly, certainly the Gillibrand bill is bipartisan, but given the state of the political scene, the congressional scene in the United States, just about anything seems to be possible or not possible in the United States these days. But in typical U.S. fashion, the way the government is trying to, regulators begin to get some clarity over, NFTs and blockchain and DAOs is through litigation, standard American behavior. There have been a number of suits put up by the SEC, by the CFTC. The SEC is gone after a lot of crypto folks. There was the Kim Kardashian case and a big fine about, you're promoting unregulated securities. The CFTC is trying to regulate DAOs or treat them as some sort of regulated instrument as well. I think the case is called OOKI, OOKI, where they have tackled, they said a DAO is, you're basically like a partnership, and therefore you need to register and your behavior needs to be monitored, and there are compliance requirements as well. Just as a general matter, and not to be too cynical, I mean, I'm optimistic, but I'm trying to be realistic looking at this from an outsider. I think these regulations are, the regulations at the end of the day will produce winners and losers. And I think that the winners are largely going to be institutions. There's a lot of overlap between the regulators and the folks who work for instance, the big banks and the big investment houses. And I do believe that the regulations are passed with an eye to ensuring that the historic institutional folks who work in financial services can keep their place. Part of my philosophy is that the big banks saw, or the big funds saw, these not quite speculation, but they saw smaller players making a lot of money very quickly through cryptocurrency or NFTs, and decided, you know what, we're going to get in on this action. We're a little late to the party, but we're going to get in on this action. And what we'd like to do is we're going to create some regulations that can that are relatively easy for us to follow, big banks, and relatively more difficult for smaller players to follow, whether it's expense or paperwork or whatever it is. And we're going to get into that space. So a lot of what I've been reading and the guidance that I've read from other folks in the legal field in the United States is, if you're getting into this space, particularly if you're outside into, it's slightly, if you're, let's say in Europe, in the EU, and you've got, crypto activity going on, or you're getting into NFTs and you want to break into the United States, the way that may happen, rather than, okay, you set up a US company and you go do your thing, the way Binance is under serious scrutiny by investigators in the United States, is you partner with an existing institution and say, rather than saying, well, we're non-US, we're going to break into the United States. No, we're non-US, and we're going to partner with an existing US entity to get into the US market, because it's going to be regulated a little bit differently and maybe a little bit more scrutiny than non-US regulation. Again, the US overall is behind. I would suggest that the US is behind the EU in terms of regulatory regulations and providing certainty. Although, again, philosophically, Amy, it's the corporate lawyer in me, I don't mind the regulation. It will provide some certainty. It will take, I think, away from a lot of the volatility that currently exists, and a lot of the what's called snake oil salesmen and saleswomen will inevitably disappear. At the same time, I am optimistic. I think NFTs and cryptocurrency and DAOs are here to stay. I think they are legitimate ways to do business, and so a regulation that regulations, and hopefully not over-regulation, that provides a little bit of certainty and some guardrails will encourage more folks to, I don't know, invest in them, because I'm not sure all of these things are investments under U.S. securities law, but at least more people to pay for them, or to capitalize them, or to be involved with them. So it's coming. There's uncertainty. There is currently uncertainty. There's currently litigation, but there will be eventually regulations, whether it's in the short term or the midterm or the longer term. There will be regulations. The United States is not going to remain, relatively speaking, the Wild West that it has historically been.
Mhm. So, you mentioned at the beginning of your discussion that the U.S. approach is one, you litigate first, and then you set your rules through litigation. And that was one of the things that struck me when I read the Lummis-Gillibrand bill. It was basically an inventory of all the litigation that had gone on to date. There was very little that was, on top of that was new, or aside from some misconception that DAOs are legal entities, but there was nothing new in there. Why is it necessary to even present the bill when you've already got all those precedents set through litigation?
Yeah, I think from my perspective, it's to provide a little bit of organizing principles, rather, and the beginnings of organizing principles. Typically the way U.S. law is going to get done, I think in this case, is they're going to have an initial bill, and then every year or every congressional session, which takes place every 2 years, there should probably be a revision or an update to the bill. Or you provide the guiding principles, and then at the end of the bill, historically this has happened in other contexts, you allow the regulators to issue regulations. You give them the discretion to issue regulations to fill in whatever technical gaps there are in the bill. The bill is not going to cover everything, but it's mostly, okay, here's what we got. Let's put something out there. It's a law. We can point to it. Now let's go let the regulators do their thing. And they can do it prospectively by issuing regulations, rather than retrospectively by suing people after the fact, and then they can begin to, again, a framework emerges slowly. This cake, I don't think in any is fully baked. I don't think it's just in terms of, I don't think cryptocurrency or DAOs or NFTs have reached their maturity in terms of their functionality and what they can be used for. So for me, it's like, all right, let's get something on the books and get some regulations in place, and give the regulators flexibility to keep issuing new regulations, in practical terms, to regulate out of existence or regulate into big fines activities that they're not really happy with. So, we shall see. Even if the bill doesn't pass, I don't think, the U.S. is not going to just let everything be as it is. The current state of affairs is not going to be, is going to be short-lived at best.
Sure. The fact is that the way this bill in particular, but I think I've read also other bills, have fallen flat, is that they're kind of skirting around the issue.
Yeah.
So they haven't come up with what some people have been calling a definition of a digital commodity.
Yeah,
So
because
it's kind of been like, we leave you the negative space within which you can operate if you want to create something that's, not subject to regulation or to heavy regulation and lots of disclosures. It's not a security, it's not a futures contract, whatever, but without actually defining what that hole in the middle is.
Yeah, and this is typically, maybe it's just sort of the U.S. philosophy. I'd be interested to hear from Anja how this may differ from an EU philosophy, but there's a little bit, I think, of ingenuity or creativity that the bill may want to foster, which is saying, okay, you can't do all these things. You can't do these things. These are regulated. But if you can come up with something that doesn't fit existing or doesn't get tangled up in existing definitions of what a security is, go for it, or at least try it and see what happens. And if we like it, we'll let it stand. And if we don't like it, we're going to regulate it again. We will issue an amendment or an adjustment or some new regulations to get that out of existence. I also don't think that the U.S. the legislatures, they're smart people, but I don't think they've got the technical expertise, or I don't think they've engaged the technical expertise to say, all right, to put up proper standalone definitions that do not rely on the definitions from the 30s and 40s in the Investment Act that were passed after the stock market crash. So there a lot of the definitions are Byzantine. They're just almost a century old, and you're trying to try and have wholesale updates to legislation is difficult, and even more difficult in today's U.S. political climate. So they're just sort of trying to grab onto whatever they've got, use whatever they can without obviously overreaching. You may want to overreach a little bit, but obvious overreaching, and then try and jerry-rig some new regulations in place with the least bit of, let's say, legislative heavy lifting. But yeah, I don't, I think that's a sort of a U.S. philosophy. Here's what you can't do. Now go ahead and do everything you want, and if there's ambiguity, try it and let's see what happens.
Well, I guess Anja has work to do even on this side of the Atlantic, going and talking with legislators about the technical aspects.
Yeah, I think the technical aspects are not even clear within the industry itself. So for the regulators to really understand well, we probably need to be much better, much more articulated. I mean, it's really hard because we've been speaking to plenty of NFT creators and plenty of NFT platforms. And yet, when it comes to how do we define an NFT, is it an ERC20? Is it 7221? Is it 1155? What all those numbers actually present and what they mean? It's yet to be discussed, and standards should actually be coming from the industry, not from the regulators. I kind of have a feeling that sometimes, or in these times, the regulation is happening because the regulation needs to be there, and because we are quite vocal about how there is a huge Wild West, instead of really focusing on which of the existing regulation could be just tweaked a bit, amended, or perhaps how could we enforce it better? As in, quite often what I hear is that people tend to agree with the notion of having more regulation because there's a lot of crime, there's a lot of frauds, there's a lot of this negative activity going on. But literally, when you deal with a criminal activity, or when you're actually dealing with some sort of a fraud, what lacks is the channel through a police station where somebody could actually raise that concern, or go to the police and say, hey, a certain crime has happened to me or to my friend, and then the police would know how to tackle that properly. Like right now, if you lose a couple of cases in crypto and you go to the police department, a lot of times what I hear is that the police department doesn't really know how to properly respond to that. And that's already a regulated criminal activity that we have means to prevent it or have means to tackle it, and we don't necessarily need a completely new regulation in this space. Nor do I really believe that we already need a regulation for, let's say, DAOs, because not even the industry itself has a really clear standard around what a DAO actually means, as in decentralized autonomous organization. Sure, like right now, we're using several different organizations. You might actually have a non-incorporated association. Those are all legit terms that already exist in several jurisdictions. And you don't have a bank account, you don't have an entity incorporated. There's a bunch of people coming together and creating something beautiful. And then they automate certain aspects of their organization, as in there's a Google form that connects directly to a CRM. And then there might be certain memberships that are being paid, and those payments might as well be very much automated and renewable on a yearly basis. And yet nobody actually speaks around that as if now we need a certain regulation because this is also a decentralized autonomous organization. Like, joke aside, I get it. Whenever it comes to the DAOs, especially in crypto space, we kind of want to see a token. We want to have a smart contract implemented. We no longer just want to have the voting on Discord. We actually want to have it integrated with all the MetaMask accounts, etc. So there's plenty of aspects to think about, but to really be regulating at this point with the positive legal documents, it's almost a bit hard. It's too hard law. We do need more soft laws. We need more guidelines. We need more communication, discourse, like workshops, perhaps even between both stakeholders, like the industry and the regulators, and less of the regulations, because what we have right now is very plural. People are actually constantly just looking, okay, what is going to be the next jurisdiction that I can transfer to my assets and my company so that I optimize? But literally, like, a lot of these types of responses from the industry are harming the community. And to some extent, you might even say that the push for more regulation is actually backfiring. So it's having the opposite effect that the regulators in the first place actually wanted to achieve.
Anja, you raised an interesting point. It's one thing to have regulations and whether they're good or bad on the substance, but you also need an enforcement mechanism. What happens? What do you do with bad actors? What happened in the United States? It's conceivable, or in elsewhere, you can say, okay, yep, I violated the regulation. Tell you what, I'm closing shop and I'm going to open shop someplace else. And what are you going to do about it? How are you can't catch me. So I do think, yeah, beyond the regulations and okay, these are the rules and you got to follow the rules. Okay, so what happens when you don't follow the rules? How do you identify the bad actors, and then how do you punish them, or what do you do to them? What are the consequences for bad actors? And I think going to the police and say, well, I've been my cryptocurrency account has been hacked and I've lost all my money. Okay, so whose responsibility is it to do something about it? And then how does that process take place? And then once that process is completed, what are the outcomes, or what are the outcomes that the regulators expect and the folks that have been wronged expect as well? And we will see. And there's going to have to be, say, in general, some, I don't know, information sharing, some global cooperation. That may be an OECD matter, maybe for another group as well. How it shows up, because right now in the United States it's like the fines. They fine Kardashian, like $1.5 million for promoting some unregistered securities, and I think Kim Kardashian can find that kind of money under her couch. And be like, okay, yeah, no problem. So what? I'll just go ahead and do it again. And the SEC thinks that's a win. Well, we find Kim Kardashian, we held her up, and now it's all in the news, and everybody's going to be scared off. I'm not sure if Kim Kardashian, depending on what Kim Kardashian made or could make from whatever she did, I'm not sure if that's enough of a deterrent. So we will see. But it is a good point. Like, okay, it's one thing to have regulations, another thing to have a mechanism, a process to enforce the regulations.
And to be very honest, Haroon, it's not actually that, quite often you would go to a Web3 conference and speak about a regulation and everybody would just be looking at you with negative thoughts in their heads. It's not really like that. A lot of people have changed their minds since 2016 or even before, and are now really willing to be compliant, to be regulated, and are wishing that there would be better clarity in this space so that the laws would not constantly change, so that the license requirements would not be like each year renewed or stuff like that. Like, a lot of people really are looking for regulatory clarity, and they wish to be compliant. So it surprises me that still there would be, projects that think negatively of it, but of course there's going to be a few of them. And quite often it's actually more or less a result of whomever deals with the regulations or whomever deals with the enforcement mechanism not being very clear about why this enforcement happened in the first place. So, for example, there has been a lot of negative talks around Tornado Cash, and the arrest of the developer. But like a lot of times people would just be saying, yeah, the developer was arrested because he was working with Tornado Cash, because he was possibly deploying even the contract. And it's not even the case. Nobody really knows. The charges have not been publicly provided to everybody. So we don't really know on which basis this person was arrested. What we do, however, know is that the threshold had to be met for the arrest to happen. I really doubt that Europe would be, breaking the law or going with a political interest alone and actually imprisoning, arresting someone for not really having the legal basis. That's not happening. And if it has happened, then this is a very clear basis to actually trigger a lawsuit directly against the state. So there should be pretty much like a lot of remedies available to people, and there should be a lot more information being shared by proper experts to really explain, well, what was the situation at hand, what was happening, what were the charges, is this a connected case, are you, for example, now endangered? Should you, as a developer deploying smart contract, also be thinking about your responsibility, or should you really be thinking about leaving Europe? Because a couple of people have actually done that because they were scared, and I'm not sure if those fears have actually been justified or whether, it's just a bit of a misunderstanding. So we should for sure be doing a better job at explaining how law functions, what the regulators are looking for, and how, for example, you as an individual or you as a company running your business in Web3 can now have a channel established with the regulators and can cooperate with them. So plenty of workshops, plenty of discourse, plenty of Twitter spaces, even like a lot of things are happening, but probably we should be a bit more vocal about it.
Yeah,
So,
true.
Hold on, because we're running out of time here. So I just want to get us back to first principles, if I can use that term improperly, probably. When we talk about cryptocurrencies, we're talking about a network of servers that are all working together to provide a service, kind of like your email server or your web server. These servers operate with a protocol, and some of these protocols, like with Bitcoin or Ethereum, we'll say when it was proof of work. Now that it's proof of stake, the SEC seems to be asking some questions, but they were considered to be, or the tokens that underpinned the economics of these networks and the coordination of all these people working together, those tokens seem to be considered digital commodities. So they're like the closest thing that we have to defining what a digital commodity looks like, or a utility token looks like, to use the MiCA approach. A lot of the things that have been discussed, a lot of the aspects that have been discussed by both of you are building on top of those networks, like an ERC20 and so on, NFTs, blah, blah, blah. You're building on top of that network. And one of the principles of building on top of these networks that are considered digital commodities or utility tokens is that they're, what's the proper word? Their properties, their property of decentralization, their property of autonomy, their property of distribution, distributed computing, is then inherited by what you build on top of it. So if we were to look at an example like Arbitrum, which is a roll-up that rolls up on top of Ethereum and is then secured by the Ethereum blockchain below it, or some other network that derives its security from a digital commodity. How would MiCA or proposed US legislation view these, we'll call them second, or in some cases even third level applications or networks I should say, that could or could not be managed with their own token. Anja, maybe you'd like to start, ladies first and all.
I mean, one thing that MiCA actually includes, and I think it's a progress, if that's the right word to use it, is the environmental impact assessment, almost, of whichever protocol we're talking about. So no matter whether it's a layer 2, layer 3, layer 1, whichever layer it is, MiCA does demand that we actually start thinking a bit more about the environmental impact that all these tokens or all these protocols, all these networks are going to have for the future generations as well. So making a distinction between the proof of stake, proof of work, or whatever actually other protocols we might be using is quite useful. And I mean, it's going to be very much needed to be discussed in the future as well, because there's going to be even more discussions around what is now going to be the technical standards for the environment and what is it that we need to take into consideration whenever we, for example, are issuing a token or whenever we're utilizing one of the protocols. So that's, I mean, no matter which protocol you're basically using, I think that this is something that you need to be aware of and that you will have to go through. How this impact analysis is actually going to look like, that's yet like another question that we have. Again, plenty of discussions, but yeah, I mean, if there is a token, then one of the consideration is also what type of a token you're issuing, whether you're, again, having a utility token, or is it going to be a stable token backed by a different asset, or exactly what type of digital representation we're talking about. One thing that goes a bit beyond MiCA, perhaps, that I would really like to mention here as well is that how I see a lot of these digital assets is basically they represent something that we have previously know on the market already, but the digitalization or the tokenization, if you want, basically just presents another medium. So just like we had a paper, just like we had a radio wavelength, or just like we had plenty of other mediums, now digitalization actually, or tokenization, presents yet another creation of a medium that we can now exchange and send over the internet from point A to point B and do so many things with it. But the thing is that we still tend to kind of figure out under which jurisdiction or under which authority we're going to be subsuming these new assets. And we tend to think around, the categories that already exist, as in this might be a security, this might be a commodity, this might be a derivative, oh, this might be something else, this is a real estate, etc. Instead of that, I would really think about the tokenization as creation of a new medium. And then whatever happens with that medium, it may already be somehow regulated, and we might be just ending up with, okay, this regulation, the existing one is not sufficient. So let's think about how we are going to be tweaking that one, or whether we really need a new one that is going to cover it all. Like, again, MiCA is covering it all in a very new way. The environmental aspect, I think, was very much anticipated, very much well recognized as well. If we exclude the ban on proof of work, which was introduced, but then it did not.
No.
Right. But apart from that, I mean, this is also a political interest. And I don't believe that any of people right now in Web3 would actually disagree with having, that notion being very, very well represented in the regulation as well, because like whenever you go to DEF CON, whenever you go to Web3 conferences, what we all talk about right now is refi, the social impact, and how the finances can actually contribute to having a bit more regenerative work being done in this space, and not just like, yes, let's consume, let's create a power of computer in the network, and let's, create new financial instruments. It's no longer just about that at all. So.
Yeah, Anja, I think your point, your distinction that you're drawing is a good one, and I don't think U.S. regulations and approach by regulators quite grasp it yet. Is the crypto and NFTs, they are a thing, and then there's stuff that you can build on top of it that are services or activities. And I don't think people look at, well, I'm going to buy crypto, and is that a security? Well, what exactly are you buying? Are you buying just it's the same thing as buying gold or buying having dollars, paper currency, or and then it becomes, what do you do with it? Are you trying to make money? This is the Howey test in U.S. securities law, which is there an expectation of profit by owning this thing? And is there, isn't there? Is it, just, okay, I bought a stable coin. For instance, I bought a US dollar stable coin. Okay, is there an expectation of profit? Well, it's a stable coin by definition. No, I'm not so sure about that. But then what do you do with that? Are you going to use that stable coin to invest in NFTs or invest in tokens? Are you going to try and arrange debt financing or, invest in sort of private markets using this? You come to another organization that will only accept stable coins rather than regular US dollars. What's the distinction here? Certainly some of these are, from my perspective, fairly conservative viewpoint is, yes, these are securities. Obviously there's an expectation of profit. You're meeting all the, the Howey tests, and yes, you needs to be registered and needs to be disclosed. But some of these other things, okay, if I just buy a stable coin just for kicks, like I'd like to just buy stable coin so that I can say I own some stable coin. Why not? And I'm not going to do anything with it. I'm just going to keep it in my wallet, and I'm not going to, I'm going to have a DAO. It's going to be a DAO that involves my family, just because I don't feel like getting on Discord or whatever, or Telegram or whatever it is. I just want to have a DAO just to talk about, to share pictures of the dog or the new births or whatever it is, the family news. Is that, do you need to register that with the CFTC? I mean, a DAO itself is, I'm not quite sure what that is. It's not, necessarily, you don't set these structures up necessarily to, okay, I've got a structure, it's going to make money. No, I've got a structure so that I can do other things with it. It's just a tool, as you've pointed out. It's like a pencil or a paper or a laptop. You don't, I'm creating 20 DAOs because I'm going to sell them at a profit. I'm not quite sure that's a practical thing to do. I don't think that's the way the business DAOs work. Maybe, but yeah, it's clear. And the U.S. regulation, again, it's behind the European regulation. There's nothing like MiCA that's out. That's certainly that's not on the books yet. So remains to be seen and where this goes. There will be. To your point, I would like regulation. It's not just the lawyer speaking. It will reduce volatility. It will provide certainty. There will be more people than, people who are afraid to get into these because of the volatility will now, okay, I've got some rules, and these will mostly be institutions, larger players who can get into this.
Just one more, because we are now touching upon the philosophy and maybe even the social topics. It's interesting how we started with, having a smart contract and having a distributed ledger of the whole network of all these nodes that are basically confirming transactions. And we really are having a distributed protocol on the basis of which then there's plenty of applications and different organizations that are being created. But interestingly enough, when the regulation started and when people really started thinking about more, let's organize, let's have different discords, let's have, a distribution of the pools that we have now gathered, or let's have grants. Quite often what you would hear was an advice is that you should be having a progressive decentralization, because if you're going to be a centralized entity, or if you're going to have all the decisions being managed in a centralized way, then this is going to be a high level of liability and responsibility that you don't want to bear as an individual, etc. So all of a sudden, it's no longer just the technology, just the infrastructure layer that is being very well distributed and very well decentralized already. It's also the social layers and applications that now need to be more distributed and decentralized. And it's kind of funny to think of the philosophical and social aspects of how these impacted all the organizations. A lot of people are now talking about what are the tools that we can use so that, for example, all the resources that we have gathered, all the fees that we have collected can now be distributed in a very decentralized way. How do we all democratically going to, how are we going to be voting? How are we going to be making decisions? And it's no longer just about the technology. It's becoming very much more decentralized and distributed, which is not necessarily the point. Having these types of horizontal voting mechanisms or liquid democracy in place is going to be very, very hard, because we suffer of not having proper information sharing and proper access to the information. We don't even know how to basically evaluate the information that we have at hand. and then how this is going to contribute towards the end goal. But yet we are being pushed towards that goal because we constantly hear about progressive decentralization. You need to distribute more. You have to have those principles established, even if you're just on an application layer. It's no longer enough, for example, to just have something being built on blockchain and then having like a organization that is going to have something implemented with a smart contract. We actually need to progress with that decentralization. And then on top of everything, there's also like a fear of having these either sanctions or whatever enforcement mechanisms that are going to be prosecuting everybody that continues with this innovation. And then this really has an opportunity to push towards even harder decentralization. So at the end, it really becomes harder and harder for the state to control and manage things properly. It's almost like a paradox, but
yeah, true. It's like, well, we've got this group together, but we can't cooperate lest we run afoul of the regulators. So, we can't have the we can't listen to each other. We can't talk to each other. And that therefore we will make sure we're staying on the right side of the law and be decentralized, because it is truly chaos. Like it's a paradox. Like we've organized ourselves so that we can do our own thing, or it can be completely there's no hierarchy or anything like that. Yeah, and how do you skin that cat? I'm not sure.
Although, I mean, previously we were going in that direction, as in how do we even progress with the enforcement? Do we need to also educate like police stations or stuff like that? But what I've seen in these spaces, that a lot of times there is some sort of a self-regulation, not necessarily as in we are now bound to create new norms. Like there is the model of DAOs that basically came out of the Web3 space, created by the academics, the lawyers that are very well ingrained in this space. And along with the organizations that have created their own legal frameworks for the DAOs. But apart from that, you also have more and more organizations that are now thinking about having or issuing certificates for whomever really wants to have that credibility when they're talking to their investors. And it's not just like, let's wait for the states, let's wait for the unions, let's wait for the global regulators to think about how or where or under what conditions the license is going to be issued. And then once my project is going to obtain that license, we're going to be very well legit. It's no longer just that the certification or that legitimization actually comes from within the space, which is very nice to observe. It's for sure a very good sign that people really want to have that security, that they kind of want to be compliant. And even if there are no regulations and laws in space, like we kind of tend to think about what is the good practice and how that can be showcased on a different platform, and how we might be, providing more security to whomever is going to invest or be our users at the end of the day.
Yeah, and even sort of taking it, I would say, just sort of building on that a little bit, you have this, I don't know what you want to call it, very philosophical human desire for order. You create these spaces, yes, completely decentralized, no central management, no nothing. That's the way we want it. And all of a sudden, yes, maybe we should have these private certificates, or maybe we should just find a way to legitimate ourselves in the absence of a governing body, outside governing body, or anything. So yeah, we will see how this there's legal aspects, regulatory aspects, political aspects, and then there's the philosophical or the even sociological aspects of this, like saying, well, we want everything, not anarchy, but not without any sort of central governing authority. But all of a sudden you start to govern yourselves, and then you say, well, maybe we can get another group to join in, or another organization join in, and we need some regular cross group regulation. And it just sort of I do think, again, I am no philosopher, no sociological expert, but I do think there's a certain level of order, regulation, rules that people will want, no matter how decentralized or how decentralized the technology is intended to be.
Well, people want certainty. They abhor uncertainty. Unless you're an entrepreneur or a creative, in which case you like the uncertainty, you don't like the certainty. But you need to have that happy medium that allows you to build in a way that you know where you're putting your feet, basically. And
And
I
you want to
think,
kind of have the clean accountancy. You kind of want to know whether you need to incorporate your business, even if you're an entrepreneur. Doesn't really matter. To some extent, you kind of want to have those things put in order. I kind of have a feeling that on the long run, what might have happened is that it's no longer just going to be, you get a legal consultation or you establish your own company. There's going to be more and more lawyers coming into this space that are probably going to be very good at making the composition. Now going back to Fabrizio, but like I really like the machine law and the composable or composability in the legal manners as well. But knowing what are the rules in certain jurisdictions or knowing what are the rules that apply to you having a business that is of a global aspect, and then having proper legal advices so that you know exactly how to plan ahead, not only with the taxes, but also with an overall compliancy. I think this is actually going to be the case that we're going to see in the future, not so far away future. It's probably going to be less than 10 years that something like that is going to be established. It's no longer just going to be, people asking whether they should be incorporating in Singapore or should they go to Dubai or should they just choose Marshall Islands. It's probably just going to be like, you need to be compliant no matter where you are. So these are the steps of how you should be compliant, or these are at least the steps, the priorities that you should be careful about and that you should be having some answers around, like if you're starting a business or if you're having something that is already offered on the market.
great. Haroon, do you have any concluding comments you'd like to contribute?
Just overall, I mean, I think what this discussion has demonstrated is that
We need more regulation.
Yeah, I mean,
regulation.
yeah, this is what happens.
We need more certainty. So
Yeah,
basically,
this is what happens when you talk to two lawyers. Like, what do you need? rules, and then you're going to have to hire lawyers to at a nice rate to tell you what these rules mean. No, I do think overall, I think the regulations are coming. Certainly on the U.S. side, they are inevitable. It remains to be seen how effective or enforceable they will be. But at the same time, from my perspective, speaking for myself, I do think a certain level of regulatory certainty is going to be good for these things that are they may characterize themselves as very innovative and we're going to not follow these rules, are not going to be bound to anything. But I do think even the folks who are let's say promoting or building these things do want some certainty. Just the way if you've got a cool invention, you want to have the patent office be able to register that patent and have the patent office be able to tell other people this is a registered patent and it's enforceable. So it remains to be seen. I would say stay tuned. This is probably not going to be the last podcast on this subject, and stay tuned. There will be new developments.
Great. I think we can conclude here, if that's all right with you folks. You have something else you want to add, or no? All right. Well, thank you very much for your time. It's been a pleasure having you on, and talk to you again soon.
Thank you, Alessandro. It was good seeing you.
Yep.
And you,
Thank you very much. A pleasure speaking with both of you.
likewise.